Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
All right, good evening everyone. Hello to all the students. Today is Monday, September 29th. I am analyst Jiang Jida. During class, please remember to like, subscribe, and share for us. If you can hear and see everything clearly, please give me a 1. If the audio and video are working fine, give me a 1. If everything is normal, give me a 1 and we'll proceed with today's Teacher's Day joint live stream. So please, everyone, leave a 1 in the chat if the audio and video are working properly. Can you hear me? Is the sound clear? Good evening, everyone. Today, I'm doing a live stream online. Because of the Teacher's Day long weekend, everyone must have had a happy 3-day holiday. Over these 3 days, I just want to remind everyone that besides Teacher's Day, the Taiwan stock market is closed. Of course, even though our market is closed, the US stock market is still open for trading. So during this period, I'll still be hosting the evening show online to share market updates with everyone. And of course, this month, or rather, next month, in October, we'll also have the National Day and the Mid-Autumn Festival coming up. Coincidentally, those are also next week, and on both holidays, the Taiwan stock market will be closed as well. But the evening show will still be broadcast live as usual, regardless of whether it's Mid-Autumn Festival or National Day and the market is closed. But next week, it'll be another teacher hosting, just a heads up for everyone. So as long as the US stock market is open for trading, the Evening with Junie show will continue to be broadcast online as usual to share updates with everyone. Good evening, everyone. I hope you all are doing well. I wonder if any of you went out to have some fun these past few days. We know that the disaster situation in Guangfu Township, Hualien, is very serious. I saw that a lot of people have gone to help, and watching the news was really shocking. I hope God blesses Taiwan and that everyone stays safe. Alright, first, let's take a look at today's investment highlights. First of all, good evening to Mei Wine, good evening to Wei Wan Wan, and hello to Chin Baoyu, Blade Show, good evening, and Cindy Cool, Happy, and Guiolo, hello, Zhou Yuan, and Louis Yang, good evening, and Peo, how do you pronounce that? Is it pronounced Peo-E? Alright, good evening. Shout out to Anaya and Min Wendio, this should be pronounced OU, right? That's correct. Good evening, Jeffrey, and also Alice Fu, and then Min, and S, and again, good evening to Alice Fu. Okay, so first, let's take a look at today's investment highlights. First up, this week brings major news. Will the US government be shutting down soon? I think what's more important this week are some key economic data releases, including the non-farm payroll numbers and the unemployment rate, which will have a huge impact on the overall market. Besides non-farm payrolls and the unemployment rate, there are also a few other important data points that I'll preview for everyone in a bit. In addition, regarding the US government, the market is of course concerned about whether the government might face a shutdown, and whether a shutdown would affect the release of economic data or the normal functioning of the government. I'll also give a brief update on this later and let everyone know whether it's something you need to worry about. As for whether the US government will shut down, based on past history, the US government has actually gone through several shutdowns and reopenings. Whether this kind of shock has a significant direct impact on the US stock market or the economy is something we need to pay special attention to. Moving on to the industry side, there are 2 stocks that are catching up in terms of gains. These 2 stocks are ones we've discussed before on the Kunin website program. They are 2 of the so-called Magnificent 7. If you're familiar, you probably know which 2 stocks I'm talking about. These 2 stocks are making up for previous underperformance, so what's the reason behind this catch-up rally? What are the unique features of their fundamentals and industry outlook? I'll also provide some updates on that today. Another thing I want to mention is, wow, Boeing. In terms of the market, Boeing's stock price has recently surged. As for its fundamentals, I think it's still a bit of a mixed bag, because previously, some quality issues had caused the market to have serious doubts about its quality control. Even the US Federal Aviation Administration got involved to investigate. However, today, there has actually been a loosening of regulations regarding Boeing's investigations and oversight. What does this loosening mean for? Whether Boeing's future stock price will benefit, or if it's actually a case of good news already priced in, that's something we need to pay extra close attention to. Of course, on tonight's show, we'll also give everyone a preview of all the major international events happening this week. Plus, we'll share some updates about the recent Teachers' Day long weekend in Taiwan. What major events have happened internationally over the past few days? And as we get ready for tomorrow, although today is the last day of September, starting tomorrow, everyone will be back at work. So tonight, on this Elite Fun program, let's analyze everything one by one to help everyone get a preview of the major and minor international events before the US or Taiwan stock markets open tomorrow. Alright, let's get started with the fun. Someone said, Alison said, the closing wolf is back again. Yeah, actually, opening and closing like this happens all the time. Speaking of Teachers' Day, I remember back when Teachers' Day. Back in our day, during our generation, we actually had a day off for Teachers' Day. So when Teachers' Day was a holiday, the teachers got a day off, and so did the students, but as far as I remember, parents and workers didn't get the day off. This year is kind of special. From what I recall, in recent years, Teachers' Day has just been commemorated, but there's no actual holiday, right? Then next month, for the Mid-Autumn Festival, there's always a day off. But for Retrocession Day and Constitution Day, which are on October 25th and December 25th, I've noticed that a lot of young kids these days don't really know about them. As for the reason behind these 2 days, it seems like starting this year, both of these days are now holidays. Of course, this also gives a lot of office workers the chance to have consecutive days off. In October alone, there are 2 or 3 long weekends, so make sure to take advantage of these holidays. Now, let's take a look at the economy. Regarding the U.S. economic data, let me first briefly introduce the 1-year and 5-year inflation forecasts for September. The 1-year figure was previously at 4.8%, and the forecast was also 4.8%. The figure released last Friday was 4.7%, a slight decrease of 0.1 percentage points. The 5-year median inflation forecast decreased from 3.9% last month, and the forecast was also 3.9%. However, this time, it decreased. From the red and blue lines, it is clear that the inflation expectations for the past year and 5 years ago have dropped from their relative highs to 4.7% and 3.7%, respectively. This also means that the market's expectations of the impact of the customs station on inflation are gradually cooling down. For example, a year ago, everyone was worried that once the customs station was cracked down, inflation might continue to soar. The expected value was 6.6%. However, as time went on, and Trump gradually made compromises with various countries in his trade wars, including some so-called exemptions for businesses and industries, the market believed that Trump's taco mentality might prevent inflation from getting out of control. Therefore, we began to see that inflation expectations from 1 and 5 years ago were gradually revised downward from their highs. This degree also reflects market expectations. Overall, I think inflation, whether long-term or short-term, does not seem to be out of control. Since it is not out of control, the probability of the Federal Reserve continuing to push forward with interest rate cuts in October or December this year is relatively high. Because inflation has not risen as high as the market fears, it seems that both the core PCE monthly annual rate and the CPI in our 9 Cups group are not out of control. We can see that the PBI is not out of control, especially last week. The latest core PCE annual rate was 2.9%, which is in line with expectations in the previous forecast. So overall, as long as inflation does not continue to get out of control, I think the Federal Reserve. There's still reason to expect interest rate cuts in October and December. Some are asking, is there still a price subsidy? It seems there isn't one this year. This time, unlike last year, there isn't a price subsidy. A lot of people used to complain that every time the government announced a long weekend, they would have to make up for it on a Monday, some other weekday, or Saturday. But it looks like there aren't any make-up days this year. There shouldn't be any next year either, since there aren't any elections. So I don't really know why this year is especially nice, like this year, for the 9/28 Teachers' Day holiday. Surprisingly, we actually get a day off now. In the past, it was just commemorated without a holiday. Now, including October, November, and December, there are a few days off, which is pretty nice. Anyway, more holidays should make workers happy, but for bosses and business owners, the pressure is probably a bit higher. Also, tonight at 10 p.m., everyone can pay attention to the U.S. pending home sales month-over-month data for August. The previous value was minus 0.4%, and the forecast is 0.3%. But this data is generally viewed as neutral and doesn't have much impact on the U.S. stock market. When I say not much impact, I mean compared to more important data like the PMI, ADP small non-farm payrolls, or CPI, PPI, or PC, those are much more significant. So, the overall importance of the U.S. pending home sales month over month is relatively moderate to low, so just take it neutrally. Another thing, at 10:30 tonight, the U.S. Dallas Fed Business Activity Index for September will also be released. The previous value was -1.8, and the forecast is -1.6. This data is even less important, so just glance at it. In other words, today, Monday, honestly, there aren't any important data releases. But that doesn't mean all quiet on the Western Front, because the really important data will come out on Wednesday, Thursday, and Friday. Later, I'll give everyone a preview of those related data. Additionally, regarding the officials, let's briefly look at the positions of Barkin, Bowman, and Liss. Barkin is not a voting member this year. Although he is not a voting member, we should still pay some attention to the remarks made by this Fed official. Barkin said that the upcoming economic data will determine whether the Fed should further cut interest rates. In other words, he specifically mentioned the data that is about to be released, not referring to the previous ones. It's not last week's PCI, nor is it the mid-month CPI or PCI. He's referring to the data that is about to be released, specifically this week. This week is very important, with releases including Wednesday's ADP, the small non-farm payroll report. Another important point is that this Friday, the U.S. will release the latest unemployment rate and non-farm payroll numbers for May. This will also include data like the average hourly earnings, both monthly and yearly rates, all of which will be announced this Friday. So, with the job market continuing to show weakness, this will also serve as a very important indicator for the Federal Reserve when it comes to adjusting monetary policy. That's why Barkin said that the upcoming data release is very important and will be a major factor in whether the Fed decides to cut rates further in October or December. Also, remember Governor Bowman and Waller, these two governors, along with a new governor named Milan. Waller, Bowman, and Milan, these three are all governors and are considered more dovish, plus they all have permanent voting rights. In other words, among all the voting members of the Federal Reserve, these three are basically doves. Doves are those who support rate cuts. So, out of the 12 voting members, just among them, there are 3 governors who are more supportive of rate cuts. This time, Governor Bowman, as expected, also said that the current tariffs are more of a one-off impact, and he believes that inflation is now close to the 2% target. With the labor market being relatively weak and fragile, he supports making interest rate adjustments as soon as possible. So it's very clear that after the interest rate decision in October, Bowman's stance is evident. His current position hasn't changed. He still supports continuing to cut interest rates in both October and December. Additionally, here's a piece of relatively negative news for everyone. This information might make people adopt a more cautious, high-level perspective. So what is this high-level, cautious message? Some research institutions, like Bitspoke, have pointed out that if you take the S&P 500 index price and divide it by the company's sales figures, the resulting ratio is quite telling. They found that this ratio is as high as 3.33, and they gave an example to illustrate this. Back in 2000, during the dot-com era, during the dot-com bubble, the highest this ratio ever reached was 2.27. Then, after the COVID-19 pandemic, when the market entered a bull run, remember how the indices surged after COVID-19? He said that after the pandemic, during the bull market, this ratio once climbed to 3.21. So, you can easily compare these ratios. During the dot-com bubble, it was 2.27. After the pandemic, during the bull run, it was 3.21. But now, the ratio has actually reached as high as 3.3. And he mentioned Buffett's indicator as well. What is the Buffett indicator? I think the Buffett indicator is something like the total market capitalization of stocks, or something like that, and then divided by GDP. Was it GDP or GAAP? It's the gross domestic product, or maybe GAAP, I can't quite remember. Anyway, once you divide it, that's the Buffett indicator. Generally speaking, this indicator, a range of 70 to 90% is considered the lower end. When you see the Buffett indicator below 90%, that's considered low. If you buy when it's in the 70 to 90% range, then in the long run, that's relatively undervalued territory. Over time, you'll earn substantial excess returns. If it's at 150 or even above 200, if the Buffett indicator is between 150 and 200 or higher, that means the indicator is leaning toward overheated. So, if you have time and are interested, you can go research the Buffett indicator. When it's in the 150 to 200 range or above, that's considered overheated, meaning the current market price or stock prices have far exceeded our GDP way too high, which means they've gone beyond the fundamentals. Right now, the Buffett indicator has already reached 218%. So you can see that even major investment institutions are saying that, including metrics like the price-to-sales ratio and the Buffett indicator, they're all at high levels. Here's the key point: since the current. When all these indicators are basically at high levels, we really can't ignore the risks that come with indicators being in this plateau zone. That's why, in the past, in August and September, we've been telling everyone that when it comes to your stock positions, you should try not to be fully invested. The reason you should try not to be fully invested is that, after all, looking at some past economic data, including various statistics, the current US stock market, whether it's the S&P, Dow Jones, or Nasdaq, keeps hitting new highs. But based on the current fundamentals and market capitalization, things are definitely showing signs of overheating. In this overheated situation, you absolutely shouldn't go all in with 100% of your holdings, because right now, the current risks are higher than the potential profit you might gain. Let me say it again, right now. In the current market, whether it's Taiwan stocks or US stocks, it's the same. The market risk right now is higher than the room for excess profit you want to earn. But does that mean the market will immediately turn bearish? Not necessarily, so there's no need to be overly pessimistic either. Currently, the indexes, whether it's the Taiwan, US, or international stock markets, don't have the momentum or the conditions to shift from a bull market to a long-term bear market. Right now, that's just not the case. And a big reason for that is because the US stock market is, of course, a major driving force and indicator leading global markets upward. So why does the US stock market keep going up? It's clearly overheated. The indicators are all high, with the Buffett index at 218, incredibly high, frighteningly high. Why is the stock market still rising, and people can't seem to stop? There are two reasons. One is that the market is currently predicting that Federal Reserve officials, whether they're Powell or Milan, are likely to support a rate cut. Trump is also very active in hoping that Federal Reserve officials will overwhelmingly support a rate cut. Therefore, the market is generally optimistic about rate cuts, including in October and December, this year, and even next year. There may be 2 or 3 rate cuts, which the market is looking forward to. Rate cuts themselves are generally positive for the stock market. Another major positive factor is supporting the US dollar. Besides the interest rate cut, another major reason for the current high US stock market is that on November 3, 2026, the US will hold congressional elections, including re-elections for both the Senate and the House of Representatives. Generally speaking, international political and economic situations often provide some support when elections are approaching, whether in Taiwan or the US. This is especially true for Trump, who is keen for the US stock market to continue its surge. In other words, with the expectation of interest rate cuts in the remaining 3 months of this year, coupled with the boost from next year's midterm elections, these two factors are why the US stock market has remained high for so long. But are the indicators at a high level? It's at a high level. The economic uptrend, whether it's the AI boom or the AI trend, is all great. But right now, the market price compared to the fundamentals is resulting in overvaluation. Whether the fundamentals can actually catch up to these valuations in the future is something we still need to keep watching. So, even with these external positive factors like rate cuts and elections, everyone still needs to be a bit cautious. We should maintain a mindset of being wary when prices are high, because at the moment, the fundamentals and the stock prices do seem to be out of sync. The gap in valuation is quite large, so when it comes to managing your positions, I still want to remind everyone to exercise some control. Taking a steady and gradual approach is generally safer. So that's just a reminder for everyone. Also, regarding Trump, people are asking whether there will be a government shutdown. Like Air just asked, is the US government going to shut down? Actually, they've gone through this open and shut process many times already, opening and closing repeatedly. They've already done this many times, and as for Trump, today, he said he would meet with the 4 congressional leaders from both parties, mainly to discuss whether the government can successfully pass the funding bill. And then, we don't want to see the government facing another shutdown on October 1st. Actually, there are still some disputes between the two parties, mainly about healthcare-related subsidies or budget cuts. There's still no consensus on those. But the key point is, when it comes to government shutdowns and reopenings, there's really no need to worry. Why? Because the US stock market and the political and economic situation in the US, government shutdowns and reopenings aren't happening for the first time. So, a government shutdown isn't new, and in the end, the important thing is that it always gets resolved. So in the future, it's not just today that you'll hear about the possibility of a government shutdown on October 1st. Maybe before October 1st, the two parties will suddenly reach a deal, pass a temporary extension, and push it back by a month or two, and then more funding comes in. Then maybe by December this year, they'll say the government is out of money again and needs to negotiate again. Honestly, this kind of drama, this back and forth, has happened more than once, actually many times. But every single time, there's always a chance to get through it smoothly. Even if, remember this, even if they don't get through it smoothly, even if there is a shutdown, there's no need to worry, because a shutdown. It might just be certain departments that shut down. It's not like every single department in the US shuts down. No, some important ones, like the Department of Defense and others, and the healthcare departments, they still have to stay open. They won't just shut down because the government has no money, no, they still have to operate. But some of the less important administrative units, or those that aren't so urgent, like departments that release economic data, for example, the non-farm payroll unit, or the Department of Labor's Bureau of Statistics, when they release economic data, that's not urgent. If it's delayed by 3 days or even a month, it doesn't really matter, it makes no difference. So, when the US government shuts down, it doesn't mean everything comes to a halt, that everything stops working, like the power department, electricity, water, everything shuts down. No, it's not that extreme. So, remember, first, this isn't the first time the government has shut down. Second, when the government shuts down, these things usually get resolved, and in the end, nothing really happens. Even if there is a shutdown, it's only a small number of departments that close. So, the overall operation of the US economy isn't affected. Got it? So, this is just a quick supplement about the recent talk in the market over the past couple of days regarding the US government shutdown. Since today is already September 29th, and with October 1st coming up, people are wondering whether there will be a government shutdown. You should have a sense of what to expect. There's no need to worry, don't stress too much. After all, a government shutdown wouldn't be the first time, and it usually gets resolved pretty easily. Now, another piece of news about the US government has come up in the past couple of days regarding tariffs. It says the US government is considering requiring companies operating in the US to produce and import a comparable quantity of chips domestically, to promote chip reshoring and strengthen local measures. In the long run, if they can't maintain a 1-to-1 ratio, they may need to reduce tax benefits. What does that mean? To put it simply, for example, TSMC, let's say they're considering TSMC, which now has a plant in the US, right? That plant produces chips in the US, maybe 10,000 or 20,000 wafers a month. No matter how many wafers or chips are involved, the point is, for example, TSMC might export 20,000 wafers a month to Apple or Nvidia, sending all 20,000 to these companies in other countries. Now, does TSMC have a presence in the US market? Maybe in Arizona, they might have 5, 6, or even 7 fabs. The idea is that the number of wafers you produce locally in the US can't be too low. You can't be exporting 20,000 wafers a month from Taiwan to Nvidia and Apple, but then only producing a small amount at your Arizona plant in the US each month. If you only produce 1,000 wafers a month there, that's not balanced, that's not fair. In that case, I might end up imposing taxes on TSMC, and maybe even on companies like Apple and Nvidia that buy TSMC chips, I might tax them too. So what he's saying is that he's considering doing this, and the main reason he's thinking about it is because he hopes that the volume of chips produced domestically in the US increases. He doesn't want the US to be completely dependent on foreign countries for imports all the time. Because if one day something suddenly happens abroad, some unexpected events, like war or an economic crisis, then maybe TSMC chips would no longer be available. At that point, some high-tech companies in the US might be in trouble. That's why the US government is concerned. If I keep relying on these foreign chips, it might not be good for my country in the future. So that's what they're worried about this kind of thing, so he hopes that going forward, the domestic chip production can also keep up with the situation regarding imports. This is something Trump has been considering lately, so it could create a certain level of uncertainty for the semiconductor industry. But what I want to tell everyone is, even though there may be some uncertainties like possible impacts on TSMC, Intel, Apple, Nvidia, more or less, whether you're an importer or exporter, you'll be affected to some extent, because there are some concerns about tariffs. But we can only say that this kind of pressure won't be as great as it was before. There will be pressure, but it won't be as intense as in the past. You know what to expect, you know that the US government is considering this, and that's enough. From consideration to actual implementation, it's still up in the air. Many variables exist, so just observe. Regarding Trump, didn't he approve a TikTok deal recently? Everyone has likely seen news about it. So, the current situation is this. TikTok in the US has already been split up. The US operations of TikTok have been handed over to American companies and enterprises to manage. As for the 45% stake in TikTok US, who gets it? It includes companies like Oracle, Silver Lake, the venture capital firm, and NGX, which is invested in by Abu Dhabi's sovereign wealth fund. These three companies together hold about 45% of TikTok US shares. Meanwhile, ByteDance, the original parent company, holds just under 20%, and the remaining 35% is held by the original investors. So overall, this whole equity split, just understand it, take a look, and that's enough. As for whether Oracle stock will keep going up, I don't necessarily think it will keep rising, because over the past couple of days, the market has already been digesting and reacting to this news. The impact of getting a stake in TikTok's US business has already been absorbed in the last 2 days. So after this news comes out, will it? It's unlikely that Oracle will surge again today. I think the chances are slim, so there's really no need to chase it. As for the equity split, to some extent, it still leaves some e-commerce and advertising revenue entirely in the hands of China's ByteDance. So how should we look at this matter? Looking at this, it basically just means that the trade agreement between China and the US is moving in a positive direction. So don't just focus on the fact that TikTok's US business is finally being split off, that Trump doesn't have to delay it anymore, and that 45% of the equity will go to Americans or American companies. It might seem like the revenue will be split and that's the end of it, but actually, on a deeper level, it shows that China and the US, whether in trade agreements or non-trade agreements, have reached some kind of tacit understanding and are engaging in negotiations in coordination. This plays a pretty crucial role in the future of China-US trade agreements, further cooperation, or negotiations. So, I think this matter shouldn't be viewed too simply. Just looking at the TikTok deal, what you really need to see is that China-US trade is moving in a positive direction, and as long as it continues that way, it will actually be beneficial for both the Chinese and US stock markets. So, with all these related news stories and economic developments, everyone should really pay attention and try to understand them a bit. When we look at these news items, it's not just about the numbers, the terminology, or the content itself. When we try to predict what's coming, like we mentioned earlier about the US government considering certain things, or the 1-to-1 import-export ratio for US operators, and whether tariffs will be imposed, this is just like what we talked about with semiconductors earlier. There are still uncertainties, but the pressure isn't as intense as it was before. In addition, the US 10-year Treasury yield and the final rate remain at 4.14, and the final rate is 3.68%. The market's expected number of rate cuts has reached 1.6, which means, Chen Mingchang, good evening. This means that this year, it will probably be at least in October or December. At least another 1 basis point rate cut, at least 1 or 2 rate cuts. It seems to me that the probability of a December rate cut is higher than the probability of an October rate cut. The October rate cut will happen at the end of October, and the December rate decision will be in mid-December. I forgot whether it was December 10th or 11th. As for the late October rate cut, we'll track the relevant data and changes with everyone on our group chat program. The US dollar index fell slightly by 0.25 percentage points today, and it's fluctuating around the 50-day moving average. Overall, I think if Trump continues to want to cut interest rates, he only needs to do so. The pressure on the US dollar index is relatively large because interest rate cuts are actually likely to cause the US dollar to fall. Just say that in the overall short term, just pay a little attention to the green line. The green line is the 50-day moving average. When will the 50-day moving average stabilize and the weakness of the US dollar be possible to change the 50-day moving average? If it fails to stand back, then it may be the same as the nearly 5 months from April to September this year. Every time it touches the 50-day moving average, it will fall. Every time it touches the 50-day moving average, it will fall. Until when it safely stands firm on the 50-day moving average, the weak trend of the US dollar will be likely to have a real turning point. So just look at the green 50-day moving average. As for the part of geopolitical risks, there's been quite a lot of news about geopolitical risks these past 2 days. How should we look at geopolitical risks? To put it simply, the conclusion is that short-term geopolitical risks are indeed heating up, and they are driving up things like oil prices and gold. But the rise in gold prices isn't just about geopolitical risks. There are two main reasons why gold is going up. First, the Federal Reserve keeps cutting interest rates, so the strength and execution of these rate cuts are actually positive for gold. When the dollar drops further and interest rates go down, overall, that's good for gold because they move in opposite directions, they're negatively correlated. Another factor is the trade war and tariff war. The market's confidence in the US dollar becomes weaker, especially because of Trump's unpredictable personality. He's just impossible to figure out, always making headlines and acting impulsively. One moment he says he'll impose tariffs, the next he says he won't. Sometimes it's a certain percentage, then suddenly it's 20%. Just in the past couple of days, he said he'd put tariffs on furniture, kitchenware, even things like soap dispensers and sinks, tariffs ranging from 25% to 50%. Basically, anything you can think of, or even things you can't, Trump is always coming up with something new. So in this kind of situation, of course the dollar gets weaker, and when the dollar is weak, people worry and there's more demand for safe haven assets. That's why gold has been surging these past few months. I remember just today, or maybe a couple of days ago, gold went above $3,800, an extremely high and record-breaking level. A new high. Now, regarding geopolitical risks, what's been in the news these past couple of days? First, Iran said it refuses the U.S. proposal to exchange all of its enriched uranium for a 3-month suspension of sanctions. The United Nations also stated that the resolution confirming sanctions on Iran is about to take effect, involving things like nuclear programs, military industry, and so on, even the financial sector. You can think about it, just imagine this situation. If you were Iran today, could you possibly not refuse? If it were me, I'd definitely refuse. Why?
Because the conditions put forward by the U.S. were, don't forget, just months ago, didn't the U.S. claim it sent B-2 stealth bombers and launched missiles to attack Iran's nuclear facilities? They talked about bunker buster bombs, and at the time, the U.S. boasted how they completely destroyed Iran's uranium enrichment nuclear equipment. Iran said, no, I hid everything well, I moved it all away. So each side had their own version. But everyone should think, if you were Iran, and today the U.S. said, you need to get rid of all your enriched uranium. What's enriched uranium for? It's specifically for making nuclear bombs, nuclear warheads. You have to remove all your enriched uranium, don't use it, destroy it, and in exchange, I can suspend sanctions against you for 3 months. If you were the president of Iran, would you accept that? Right? That would mean giving up all your means to attack or threaten other countries, your most important weapon, enriched uranium for nuclear arms, just to get the U.S. to pause sanctions for 3 months. Isn't that a joke? So basically, I wouldn't agree to that either. That's why Iran directly refused, and I think that's totally reasonable. This also shows that when it comes to nuclear weapons and Iran's nuclear program, there's still room for negotiation with other countries. There's still something to talk about. Also, take Venezuela for example. Speaking of Venezuela, recently there have been a lot of news reports about the U.S. They've sent warships, missiles, and even used drones to carry out strikes in the Caribbean, supposedly targeting drug trafficking and smuggling. Anyway, just recently, they destroyed about 3 drug-carrying vessels, and about 14 people were killed in those strikes. Besides that, the U.S. has recently deployed more forces in the Caribbean. 8 warships, including the latest F-35 fighter jets, have been sent over. They've also stationed more than 4,000 personnel, well, over 40 personnel. I think these are military personnel or something similar. Anyway, they've all been deployed there. The reason they gave is that it's to combat drug trafficking and smuggling in Venezuela. But everyone should think about this, if it were just one country, and the U.S. wanted to crack down on drugs or smuggling within my country, would you need to send 8 warships, deploy F-35 fighter jets, and 4,000 personnel? Doesn't that seem strange? That's why Venezuela is worried. Venezuela thinks this isn't really about fighting smuggling or drugs. There are even rumors the U.S. might send drones to directly strike drug trafficking labs inside Venezuela. Venezuela is preparing for military exercises. Why does this situation seem to be causing a short-term spike in geopolitical risk, making everyone rush to take action? It's because Venezuela produces 870,000 barrels of oil per day in 2024 and 2025, not a lot. 870,000 barrels isn't much. It's ranked 20th in the world. The US is 1, Saudi Arabia is 2, so 20th is far down the list. It's an oil-producing country to some extent, so there's concern that if war were to break out, people would think oil prices would rise. But it only produces 870,000 barrels. It's only ranked 20th. Second, whether it's cracking down on drugs, smuggling, or similar issues, these kinds of developments don't have impact on international crude oil prices. The international crude oil price hasn't broken above the 200-day moving average. Don't forget Trump. He wants oil prices to go down. Trump wants oil prices to go down. So, if you say crude oil will immediately surge past the 200-day moving average just because of Venezuela or Iran, and then shoot up to $66, $67, $68, or even $70, the conditions just aren't there. After all, the current situation. International crude oil demand is low. Economic data is key. Let's look together. Today is the last day of our Teacher's Day holiday, so everyone can relax and listen. If you just started class today, that's fine. You can listen to the replay later. Take your time, it's all good. As long as you finish, then tomorrow, whether Taiwan or US stock market opens, or even tonight when the US market trades, you'll know what's going on. It's better to listen early, so when you face tonight's US market or tomorrow's Taiwan stock market opening, you'll have a grasp. That way, you won't have to wake up tomorrow and check Feifan, E-Today, or the Industrial NAMP, Commercial Times, feeling overwhelmed. The benefit of Su Yuanin's program is it gives a summary of international and US stock market events the night before. So, when you face the Taiwan or international markets the next day, whether Hong Kong or others, you'll have better direction. Even for the US market that night, you'll have insight. You'll have a clearer direction. Let's look at this week's economic data. Today is Monday, and the economic data isn't very important, so no need to worry. But on Tuesday, September 30th, more data releases are expected, such as from China and the US. For the US, this includes real estate data, the Chicago PMI, and the JOLTS job openings report, which are worth attention. Also, tomorrow night, the Federal Reserve's Vice Chair Jefferson will give a speech. Many officials need to pay attention to early morning conversations. On Wednesday, October 1st, Voting Committee member Jefferson, Vice Chairman of the Eurozone Economic Information Committee, and UK representatives will be present. The U.S. manufacturing PMI will also be released Wednesday. Besides PMI, Wednesday is important for ADP small data, public employment data. ADP small data is very important. On Thursday, we'll see the monthly factory order rate. The most important data this week is Friday, October 3rd, heavy data for Europe, the UK, and the US will be released. The service sector PMI is particularly important, especially in the US, even more than manufacturing. It's out Friday. Also on Friday, latest US unemployment rate, non-farm payrolls, and average hourly wage monthly/annual rates for September, including non-manufacturing PMI like ISN. The Friday release coincides with the 8:30 p.m. Kuning website program tracking the latest unemployment rate, non-farm payrolls, and hourly wage rates. Pay special attention. This plays a crucial role in the Federal Reserve's monetary policy regulation. The Federal Reserve monitors unemployment, non-farm payrolls, and CPI/PPI/PCE data, which is extremely important. In financial reports, we'll look at Carnival Cruise Line tomorrow. If you've been on a cruise, you know Carnival is famous. I still haven't found time for Lixing Cruise, only Tama Ferry. Do you know Tama Ferry? It's not a cruise ship. If you served in the military, you know it's the ferry between Taiwan and Matsu. The ship is called the Tama Ferry. I've taken the Tama Ferry before, but that wasn't for vacation. That was once when I went to Matsu, Kinmen, and Matsu for a trip. There was one time I went to Matsu. We took a plane to Matsu, a convenient 1-hour flight. Matsu is special, with nice scenery, old battlefields, and beautiful tunnels and mines. After 3 or 4 days, as we prepared to return to Taiwan, Matsu's often unstable weather turned bad. Flights were canceled, leaving us stuck for almost 2 days. I realized this couldn't go on. We needed to get back soon. I had to get back to work, so this left a deep impression. We flew there, but on the way back, due to bad weather and no flights, and since I had to work, I had no choice but to take the Tama Ferry, Tai for Taiwan and Ma for Matsu, so it's called the Tama Ferry. The Tama Ferry was good. I got on one of the newer ships. Taking the ferry from Matsu felt like escaping. Many people went for vacation, but on the way back, they couldn't fly because of heavy fog and bad weather. Planes couldn't take off. Tons of people were stuck at the pier, waiting a day or two. Some slept there overnight, trying to get a ticket for the ferry back. It felt like we were refugees. Luckily, I got a spot on the ferry back to Taiwan and made it home. The trip back took 8 hours. You ride the ferry for 8 hours. From Taiwan, the boat chugged to Keelung Port for 8 hours. But honestly, it was pretty comfortable. I didn't get seasick. It was the only time I've taken such a long ferry ride. It wasn't like the Gushin Ferry Terminal 1. The ferry from Gushin Terminal to Sijin only takes about 10 minutes. The longest ferry I took was the Taiwan Matsu Ferry. Someone said it was flatulent, and I thought, teacher, you can't swim home. You can't swim home. I can't swim home. You can't swim from Matsu to Taiwan. Matsu is closer to mainland China, perhaps Xiamen, so the Taiwan Matsu Ferry is the only option to Taiwan. If you have time and want to try Matsu without flying, take the Taiwan Matsu Ferry. The ticket price wasn't expensive. Why discuss cruises this week besides Carnival? Since we just talked about Carnival, its financial report will be released tomorrow. Let's look at consumer-related companies. They should perform well. Nike released retail products on October 1st and will release its financial report. It's unlikely to perform well, as its reports for the past few quarters have been disappointing. Same-store sales, product performance, and innovation have been poor. As discussed, Nike shoes often separate after washing, indicating poor quality. Nike will also release its financial report on October 1st. Mid to late October is approaching, and many U.S. stocks will release their latest third-quarter financial reports in mid-October. It will start in mid-October. We move to the industry side, Apple. Earlier, regarding our main investment focus, we mentioned 2 stocks making a catch-up rally. Crucially, U.S. stocks are a key confidence indicator for the index and bull market. Everyone looks at the Magnificent Seven. Look at the Magnificent 7, Magnificent 7 plus 1, adding Broadcom, or Magnificent 7 plus 1 plus 2. Whether it's the Magnificent 7 plus Broadcom, or plus Oracle, or whatever, no matter if you add 1 or 2 more, these are all stocks that really concentrate the market's momentum and confidence into a few big companies. Looking at the Magnificent 7 right now, the ones that seem to be catching up are basically 2 stocks, Apple and Tesla. We've mentioned before that if you missed out on the earlier moves, you should keep an eye on these 2, because they're currently in a catch-up rally. As for Apple, there's some recent news. Bloomberg reported that Apple is internally testing an app code named Meritas. What is Meritas? In Latin, Meritas translates to truth. Clover is more comfortable and looks better. I don't know, is Clover a standard for Adidas? Anyway, they're testing an app code named Meritas, which is a GDP application basically aiming to learn from ChatGPT. So, this Meritas. In the West, in Latin, it means truth. Melita. In English, that's actually the motto on the Harvard University crest. It says Melita on it. I think Melita means truth, same as Harvard's motto. With Apple launching this, everyone wonders if it will improve things. Next year, they'll release this AI Siri. If it performs well, it will help Apple. If not, they might fall further behind Google or Samsung. But I don't think this news will have an immediate impact, because first, it's just internal testing, and second, right now, we haven't even seen a shadow of it yet, so whether it's going to be early next year, in March, or not until the end of next year before Apple's AI Siri or any AI features actually make it onto their latest phones, honestly, right now, there's just no sign of it. So in the AI space, Apple is still behind. Apple is still lagging in AI. But right now, the bigger positive factor for Apple is, what's been more helpful for Apple recently isn't Siri or AI. So what is it? The iPhone 17. For the iPhone 17, 56% of respondents said they're willing to buy the latest version of the iPhone 17 Pro or Pro Max, higher than the past average of about 50%. Because iPhone 17 sales are outperforming market expectations, investment institutions like Morgan Stanley, JP Morgan, Bank of America, Goldman Sachs will jump in, upgrade their ratings. Their target prices for sales are like this. They do. We've told everyone Apple is like this. Every September, they release phones. After launch, mid-September, the market digests news. Then, if phones sell well or not, and how people review them, comes out. It takes 1 to 2 months for things to settle, then everyone knows that sales are good. When sales are strong, there's a price surge in November. Why go up in November? The market knows if phones sell well after testing waters. Once things are stable, then by November, why the surge again? After Thanksgiving, Christmas shopping, and gifts or phone upgrades, November prices climb. How high do they go? It keeps rising until after Christmas. Every year, Apple's stock trend is the same. It fluctuates in September, goes up in November, dips and fluctuates a little, then from early November, it climbs again. That's the usual pattern. Right now, the iPhone 17 is performing well, sales are still positive, and the sales situation is meeting expectations. So, for Apple's stock price, it's still been helpful, reaching $255. As for a chance to challenge the all-time high above $260, I think there's a good chance, especially if the iPhone 17 continues to sell well. There's a chance if the 20-day moving average isn't broken. If it holds, the stock can keep building higher. Reviews for the iPhone 17 are still positive, and Apple fans will buy it regardless of performance. Honestly, even though this year's new Apple phone lacks strong AI features, it's a new phone with excellent hardware. Plus, they released an ultra-thin model, just a few millimeters. Was it 5.6? 5.6 or 5.5 centimeters thin? No, 0.55 centimeters. A phone that's only 0.55 centimeters thin, the Air model, the AI Air, that Air phone version. I think that's also a highlight, a new selling point. Whether you're an Apple fan or not, people will more or less still buy it. And overall, this is good for its revenue or profit contribution. It will still help. That's the idea. For Apple, it's in a catch-up rally. As long as the 20-day moving average isn't broken, it keeps climbing and could challenge its previous all-time high. Extra info about Apple. Moving to another company, Tesla. Has the Air already dropped in price and is being sold? That fast? Should I go buy one too? I was originally thinking. I thought it would probably only drop in price after about 2 or 3 months. Maybe by the end of the year, if there's really a Christmas rush or some Christmas holiday deals. When good deals appear, if my phone breaks, I'll switch to the iPhone 17 or the Air version. Last night on Shopee, a 3,000 off coupon, impressive, you acted so fast. About Tesla, he said, in August, Tesla's registrations in Europe dropped 23% year-over-year, marking 8 consecutive months of decline. You might say, teacher, 8 months in a row of decline, that's terrible. Yes, it's terrible. But if it's so bad, why does the stock go up? It's not because of the drop in European registrations. Everyone already knows this. Why do I say everyone knows? Because it's been 8 months in a row, not the first or second month. For 8 straight months, sales have been bad, people have become numb. When you're numb, as soon as there's good news, it becomes bad news already priced in. Because August marks the 8th consecutive month of decline. Wait for Polo to drop prices. Polo is good. Whether it's Polo or Polo Max, hardware performance is solid. I remember the 48 megapixel camera was impressive. He was saying, why is the market showing positive sentiment? About Tesla's sales, some are more optimistic about their shipments or sales forecasts. Why? Because, in fact, early October, which is coming up soon, whether it's the first week or October 3rd or 4th, Tesla is about to announce its Q3 delivery numbers. Right now, the market estimates 448,000 vehicles, and many investment banks are raising their delivery forecasts. Why? But teacher, didn't Tesla's European sales decline for 8 consecutive months as of August? Yeah, that's bad. Another key point is that in the US, many consumers rushed to buy EVs before the $7,500 tax credit was set to expire. This incentive was supposed to end in September, and Trump ordered its cancellation because he doesn't want to subsidize alternative energy industries like solar, wind, or EVs. He thinks these things don't really do much to help the economy, yet they get so many subsidies. So the very first thing he did after taking office was to remove all these subsidies. Specifically for electric vehicles, the $7,500 tax credit was set to be canceled by the end of September. $7,500 is no small amount. Converted to new Taiwan dollars, that's about $210,000, which is a lot. Once this tax credit is removed, people started thinking consumers will rush to buy cars before the end of September to take advantage of the credit before it ends. This creates a wave of panic buying, with everyone placing orders and trying to get the discount before it expires. Of course, another big piece of good news is that after Elon Musk wrapped up the Doge department, he gradually returned to his core businesses, whether it's electric vehicles, SpaceX, FST, Robotaxi, or Cybertruck, and so on. He's now refocusing on his main ventures. Aside from his main businesses, a major positive development happened last week, or maybe the week before, that everyone remembers clearly. Musk increased his stake in his own company by buying $1 billion of stock. Not 1 billion new Taiwan dollars, but 1 billion US dollars, which is 30 billion new Taiwan dollars. His company's stock, this positive news, is still holding up the price. He bought around $372 to $396 per share. Anything under $400 per share is his cost basis. He bought $1 billion worth at that price. That much. Also, last week, everyone should take a look at a scene where they attended Kirk's memorial service. Trump and Musk shook hands. There was a handshake. They were both at that memorial service, an event for a funeral service. During it, Trump and Musk, no one knows what they talked about, but later, they shook hands. Everyone is interpreting this positively. People are asking if Musk and Trump are patching things up. But honestly, I don't think it's going to go that far. It won't happen quickly, but at least it's a good start. As for Tesla, last Friday its stock price surged to $440. I want to remind everyone about the descending triangle pattern. Calculate the one-to-one move from a descending triangle. Neckline 290, highest point 367, breakout point. This area is $330, so calculate the one-to-one move. Due to regulatory requirements, I can't tell you the exact target price. I can only tell you that the first minimum short-term target has been reached. The first minimum target has been met. Now, whether the second target can be reached is very important. Why is that? Look, if this descending triangle has broken out, post-breakout, the initial target has been reached. If we zoom out, its target. If we zoom out and look from here. Starting April, looking back, the low point in April was $214. If the low point was $214 and it rose to $367, today, it's not just forming a descending triangle consolidation, but moving in an ascending flag pattern. If it follows an ascending flag pattern, you need to calculate the one-to-one move from 214 up to 367. The descending line is here, and the starting point is at this spot. You can tell from the chart how much that is. To calculate the one-to-one, take the move from 214 to 367, project that same increase upward from here, and you'll know where the one-to-one target is. Some students have asked me, "Teacher, Musk is buying stocks again, shaking hands with Trump, and returning to his core business. Does it have a chance to reach a new high again?" The previous high was around $488. Can it break that record? Will it react? Is there a chance? I want to remind everyone, you need to know how to calculate. As long as this ascending flag pattern forms, if it plays out, you'll know if it will challenge the previous high of 488. You'll know. Regulations prevent us from directly telling you if it will reach that level, but if you know how to calculate and can read this chart. If you understand this chart, you'll know if it reaches that level. You need to calculate. I'll explain the calculation later if there's a chance. For those who know, the low is 214, high is 367, and breakout is 330. If you don't know, look up calculation methods online. Lastly, this relates to Boeing. Boeing, look at this situation today. Turkey's national airline has announced that it still plans to purchase 225 Boeing aircraft. The planes are really, really good. Honestly, I think Boeing has truly met its benefactor, and that benefactor is Trump. Trump is Boeing's benefactor because he treats Boeing as a very important strategic company. After all, there are only two companies in the world that specialize in making airplanes. One is Boeing, and the other is Airbus. You can only buy planes from these two. There's no third option. That's it. So of course he wants to support American businesses. That's why every time Trump negotiates with other countries on economic or trade matters, he brings up these two companies. By his side, one is Jensen Huang from India, and the other is Boeing. So, for these other countries, you either buy Nvidia's chips or you buy Boeing's airplanes. It's always been about planes and chips, just like that. Every purchase is worth hundreds of billions. Turkey also announced it wants to buy 125 planes. The biggest boost is that besides Boeing following Trump to blaze new trails, they've secured plane orders from the Middle East, UK, Europe, and other places. All these orders are good news for Boeing's stock price. Today, the biggest positive news is this one, yes, this one from the US. Thank you, it's this sparkling water. The U.S. Federal Aviation Administration, or FAA for short, actually gave such a huge boost. They announced that starting next week, they will restore some of Boeing's authority, allowing Boeing to once again conduct the final safety inspections for the 737 MAX and 787 Dreamliner themselves. What does this mean? Back in 2018 and 2019, if you remember, Boeing had two plane crashes. There were two crashes. A lot of people died, hundreds of people, because both planes went down and everyone on board was killed. Everyone was gone, and then, more recently, just a few years ago, remember Alaska Airlines? Or another airline? Anyway, after flying, the cabin door blew off and flew out, right? Also, issues with panels, many different reasons. Sometimes it was due to fake parts, not meeting standards, or whistleblowers. They either covered things up or took countermeasures. Many shady things were going on that are hard to explain. When the U.S. Federal Aviation Administration couldn't ignore it, they stepped in. After their involvement, what happened was, when they got involved, it meant that every time Boeing wanted to roll out a plane or do anything, the final inspection and quality control had to be done by the FAA. The FAA had to check every single plane and only let it go if it was okay. But today, they actually announced, the Federal Aviation Administration announced, that starting next week, whereas before they had to double-check the safety and quality of Boeing's planes, now they're actually going to give some of that responsibility back to Boeing itself for safety inspections. So what's the benefit of this? What does this mean for Boeing? The benefit for Boeing is that it can speed up production and deliveries. Jeffrey said that Boeing's plane shouldn't be called the Dreamliner, but the Disappointment Liner. Later, when there were quality control issues, the FAA had to step in and supervise both the 737 and 787. Now, with this partial relaxation, Boeing can go back to doing some of its own inspections. How should I put this? I really think, are you telling me Trump didn't put any pressure on them? I just don't buy it, honestly. After all, Boeing is an American company, right? I just don't believe it. And every time Trump went abroad for diplomatic trips to secure orders, he would always bring Boeing and India along. Of course, you'd want Boeing to deliver those planes as quickly as possible so you can earn foreign exchange. So, when you say they're gradually letting Boeing handle its own safety inspections again, whether that's good or bad, everyone has their own standards, right? Because before, they were producing too fast, and all sorts of problems cropped up. For example, people would joke that if a plane had 100 parts, after taking it apart and checking everything, when they put it back together, they'd find, strangely, there were only 98 parts left, 2 were missing. So, with those 2 missing parts, where did they go? Did someone put them in their pocket or somewhere else? They couldn't be found. This happens because everyone's in a rush, rushing to do repairs, inspections, and deliver planes. Mistakes are inevitable in the chaos, and such situations occur. In terms of flight safety, this is a serious issue. Over the past few years, these problems have led to many aviation safety incidents. So, Boeing, since the U.S. Federal Aviation Administration has already approved it, we have to accept it. If we're worried, there's nothing we can do. When it comes to airplanes around the world, it's not like we can just choose between Boeing or Airbus. There really isn't much of a choice. Hey, good evening, Hedgert, Gwa. As for Boeing, their stock price just keeps going up and up. Anyway, they got this benefactor, Trump, helping them out. Last Friday, the stock went up 3.62%. In the short term, just pay a bit of attention to this neckline, don't let it break. But honestly, it's not a big deal. If it does break, just keep an eye on it. For now, the neckline is still holding, because last week, a turkey order was mentioned. Today, the FAA authorized Boeing to conduct its own inspections. Stay alert. Technically, as long as the neckline isn't broken, we respect the technicals. Boeing or Airbus? Everyone decides. Looking at U.S. pre-market gainers, CarMax is up 4.76% because positive news relates to certain acquisitions. Vishay Intertechnology rose 3.83%. App went up 3.1%, and Freeport-McMoran increased 2.66%. Meanwhile, Coinbase, the Bitcoin company, gained pre-market 2.37%. Companies Raytheon Technologies, Seagate Technology, and Vistra Energy rose nearly 2% in pre-market trading. Decliners include Intel, pulling back after big gains. Intel had much positive news. U.S. government, SoftBank, and last week Nvidia invested $5 billion. Rumors of TSMC or Apple talks persist. Positive news keeps emerging. Intel is down slightly pre-market, 1.3% after last week's 20% surge. A small pullback. Mission Produce and Fulgent Marketing are also down slightly, 0.48%. Overall, the U.S. stock market should rise today. Dow Jones is strong above the 20-day moving average. Philadelphia Semiconductor Index maintains a bullish pattern above 20 and 50-day moving averages, hitting new highs. Market leaders continue to drive the U.S. stock market higher. Recall, if it's the Magnificent Seven, Big Eight, or Big Nine, maintaining confidence is key. As long as the 20-day and 50-day moving averages hold, there's no risk of a bear market. Yet, as noted, despite no immediate downturn risk, be aware of high valuation risks. We're at a historical high, not a low. So, for positions, be cautious. This pre-market U.S. stock market update is done. Like, subscribe, share. Smooth trading to all. See you tomorrow. Bye!
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.